Good evening, ladies and gentlemen. Today we're going to be talking about Microsoft earnings. Is the move justified? Is the move not justified? And where we could be going from here, along where we're briefly going to touch on the market as a whole and where we see the market going in the future. However, before we get into the video, quick legal disclaimer. This is not financial trading advice. I'm not a financial advisor. All risk you take in the market is your own. And by doing so, you place the trade, you understand the risk, and it is your sole responsibility. With that, let's get into the video. So today, for Microsoft reported earnings on January 24th, we're going to quickly look at Earnings Whisper, which is going to be linked down in the description below. The Earnings Whisper page, for all those that aren't familiar, is a great resource for looking up earnings. It tells you when they're coming up, when the company reports, what the estimate. The Earnings Whisper number is probably the most accurate of what the market is expecting. It's a combination of a lot of different metrics. So that'll be linked down in the description below. Quick thing, reported earnings were $2.32 per share, and the Earnings Whisper was 2.25. That's about a 7-cent beat. That's mediocre in my opinion for Microsoft. Tech companies usually have a significant beat or miss. I'm not excited about a meets for a tech company, let's put it that way. The reported revenue was 52.75 billion. The estimated was 53.48, so they missed on revenue. That's pretty bad for a tech company. These are high growth companies and you want to see increasing revenue. They are what I essentially call debt churning machines. They take on debt to then drive the revenue up to justify taking on that debt. So now let's take a look at the charts for Microsoft. When I first recorded this video, guys, Microsoft was sitting at 248.21. We just had this nice pump up, consolidating towards the top, had a little bit of sell-off, and I was actually talking about, ironically, what they were saying in the conference call, and all you saw was this craziness, jagulation in the market and what Microsoft was doing. Now, if we actually pull up what the charts are showing us, we have a nice, massive pump up and sell off on Microsoft. And we're actually pretty much flat on the day. You closed around 242-ish on Microsoft. You came to the lows of 240. You're sitting around 240.70. Microsoft basically retraced the entire earnings pump off the EPS and revenue. Like we talked about, it barely beat EPS. That, to me, a tech company that doesn't perform out stellar is a miss. Case in point, any bad guidance that's told in the press conference sends you right back down. Could we have seen this coming? And the answer is yes, and the answer is no. So if we look at the green line, which is our 200 daily moving average, if you had this massive pump, you're not going to be able to get in this. This is algos. This is computer trading, executing. You're not faster than this. So if you took a second to think about it, you're near resistance. This green line, once it extends, let's see if I can get the hour view. There we go. So once this green line extends, you're about 0.37% at resistance. Why on earth would you want to buy near resistance? Even if you break through this resistance, like I've told you multiple times, I'd rather miss out on that 0.5% to confirm the trade, have a retest of that support, confirm the support, and then go higher. And I put my buy order when once it comes back to that point with a stop loss below. So if I get stopped out, great. Okay, I missed the trade. Whatever. Don't try to chase the pennies. So what happened here? We had a massive pump up, and then we came right back down. So what does this tell you? Microsoft gave you bad guidance, and that bad guidance was that its forecast calls for 50.5 billion to 51.5 billion in fiscal third quarter revenue, missing estimate calling for 52.4 billion. Pretty cut and dry. They missed revenue this quarter and they downgraded their estimate past what they came in revenue now. So that means it's decreasing revenue, the company's not burning as much profit, and just because one cloud service part of Microsoft comes in and actually hits that growth, cloud growth, okay, congratulations. Your cloud growth just lost you everything if you bought here. So it's pretty simple. It proves the point of, do I want to invest in part of a company or the whole company? I think the market's spoken and you're investing at the whole company. So if we look at Microsoft's chart for this, we actually missed, and I'm a little sad at this, that there was a nice gap here from the CPI sell-off, 257.41 to about 255.14. This gap fill right here would have been nice. I would have taken a nice long position, probably once we entered the gap, rode it up to it, exited out, looking for possibly a reversal at that point, or if we continued higher to 262, that would have been my dream short on Microsoft. I've been waiting to short Microsoft ever since I got the last trade back in December. That was great. So I've been longing for it. I've been very patient with it. However, Microsoft barely came up to this gap zone. We found sellers up here, which is probably right before the sell-off. This is a miniature zone right here. Found sellers, sold completely off when the bad news hit. Honestly, speaking truthfully, this move wasn't justified. You literally should have not seen past 243 on Microsoft. You should have hit previous resistance here and just stopped. That's what the EPS should have done. It shouldn't have done this massive craziness. As you can case point and see, Microsoft completely sell off. Now, where could we find, if you're looking at the bullish scenario? I'll be looking for Microsoft right around 230-ish, and I'll be cautious to break the lows of 231. That's right where I'd probably be maybe trying to pick it up, or a little bit higher with a stop loss of probably 229.5, just so if we break below this swing point here and see where we can go higher from there. However, do your own due diligence on it to see what the technicals are telling you. Now, if we look at the MACD on the 4 hour, prior to the craziness that we saw, we actually were basically converging and diverging on the MACD. RSI was kind of starting to curl down. And then if we put in extended hours, it's clear cut. MACD's about to cross this massive sell off. We're probably heading lower. On top of, we're probably going to gap down on Microsoft with the bad news of the revenue. Tech companies have an outsized reaction to shorting. Shorts need volume, and after hours, you rarely have the volume needed to actually drive a company lower. So tomorrow on Microsoft, I would definitely be looking at where we could go, where we could bounce. You may have intermediate bounces, but I highly would not recommend touching Microsoft for a bullish position. If you're trying to short it, I think you may have missed the boat depending where we open. I would definitely be looking at having a tight stop loss on it, because if we start breaking to the highs, it's already shown that it could go up here. We have to be cautious. So we got to see what we're going to do with that. Now the reaction to Microsoft is the correct reaction, in my opinion. We should have not done this crazy rally up. It was not justified in any way, shape, or form. Stop chasing rally, guys. Please, it's not worth exposing yourself to that craziness. Let Microsoft do its thing. Buy it on open if you think it's bullish. Have a stop loss. Move on. There's many more trades. Remember the phrase, live to trade another day. You take losses are inevitable. Case in point, if anyone was trading Microsoft here, you should have a tight stop loss, get stopped out, take the loss, move on. So if we look at S&P today, after Microsoft's epic sell-off, we're down post-market about 398.74 on SPY. That's pretty the low of the day. So basically we went sideways for the day, and now we're at the low of the day. Probably going to head lower in after hours trading futures, because there's not a lot of momentum holding you up here. You had a nice consolidation, especially if you break below this low, you're heading lower. NASDAQ, same story, and sideways consolidation, hitting support of lows and starting to crack it. I would basically be saying expecting more downside on the market. We're near a reversal zone, the big supply zone up here on NASDAQ. S&P, same story on 4 hour. We nearly hit it up there. And let's go back to what I was saying about the S&P. RSI overbought. MACD it's not really somewhere I want to be buying or selling, because it can cross over either way. If we look at the 50 weekly moving average, we were close to it the other day. Came lower, good today, came lower. This has been the history of the S&P with that damn moving average, and it's pretty much playing out like it's played out last time. If you remember the nice CPI pump and dump, well, that's what happened. You had a nice, massive sell-off every time we come near this purple line. I feel like a broken record when I tell you this, guys, but until the S&P breaks above that purple line, not going higher, we're probably more potential for downside, especially with Microsoft signing the death nail in tech coffin, as I call it. Netflix was the golden child of what was supposed to happen. Microsoft reported very poor earnings, in my opinion, shown by the massive pump up, slam down, and now we're going to head into Google, Apple, and Amazon, and Tesla tomorrow, the big three the next week. It's going to be truly fascinating to see what Tesla does tomorrow. That will be a really good sentiment of retail traders, how much risk on or risk off behavior they're willing to participate in. Stay tuned for the video tomorrow on Tesla, guys. Definitely be covering that. Boeing as well. That's one of the big ones we're going to be covering tomorrow. So if you guys like the video, hit subscribe for more. We're going to have weekly updates on the market probably throughout the week, and then we do a big deep dive at the end, along with technical analysis on various stocks throughout the week. With that, I bid you adieu, guys. Drop a comment down below.